Record. Hey everybody, Economic Ninja here. I hope you're doing well. I have on today Lior Gantz. If you don't know who Lior Gantz is, he's really big into the mining industry and precious metals, both gold, silver, and actually a myriad of things. I had him on today because after the video I did about Gold Mining Inc. and inflation, he called me, had a ton of other ideas of what's going on with the gold trade and how it pertains to what's going on with inflation and the Fed tapering. Lior, how you doing?
Doing well. Thank you for having me, Ninja.
Awesome. Thank you so much for coming on. So the reason why I had you on and we want to talk is because we were talking earlier about the Fed is sort of in a lose-lose position. Their backs up against the wall. If they taper and actually go through with it, I know that they bought a little bit less this month. And that sounds funny that that's where we're at right now. But if they actually go through with it and cause rates to really rise, that could be bullish for gold because people could actually, investors get fearful saying, there's no way you can pull this off without the economy collapsing, correct?
Yeah, we put together actually a report, Ninja, at wealthresearchgroup.com/2022. And it's the full economic outlook for this year. And you can download that, especially for your viewers. And what we said in there is this setup is very similar to what we saw in 2016. And the Fed, since 1971, has embarked on 6 rate hike periods, 2 in the 70s, 1 in the middle of the 90s, 1 in the early 2000s, and 1 between 2015, December 2015, and 2018 until the pivot in January 2019. The average gain from when they start this for gold is 30%. So at $1,800, you're talking about a $540 move for gold on average. The big difference this time, and by the way, 6 times, every time gold rises. It's not like the average is 30% and there's sometimes that it's down and sometimes it is up. Okay, so there's 100% historical precedence that gold is starting to go on a tear. And why is it even more of an amazing setup this time? One, we've just had 3 years where the S&P 500 and the Nasdaq both did triple-digit years. This doesn't happen a lot. Yeah. The 4th year, whenever 3 years in a row, there's a triple-digit gain of 20% or more. The 4th year is split historically, 4 times up, 5 times down. It's a very bad risk reward. Secondly, there's so many rich people that made a fortune just holding FANG stocks that this is going to be a really good year for them to sell and hedge. When Wall Street hedges, it goes to gold. So these are 2 big things that are really important for gold this year.
You know, I'm glad you brought up 2016 because when the Fed started raising rates and they had their dot plot plan, I started running for the hills because I'm like, we were just coming off of QE and massive money printing that was going on. I'm like, nobody's going to be able to pay their debt. It was, to me, in my mind, hearkening back to 2004 when they were starting to raise rates. And a very similar thing happened. People don't really realize it, but I believe it was 2018 in October, the Dow started a downward turn because quite truthfully, companies could not, sell enough or produce enough to pay their debt at those higher rates. The Fed got their Fed funds rate between 2.25%, maybe a little above that if memory serves me right. And we started an epic crash. I think it was 20 to 22%, first leg down in the Dow Jones from beginning of October 2018 to Christmas Eve. Then we saw an immediate reversal. The Fed went from a tightening stance to a lowering, the shortest time in history, I believe, if memory serves me right. Now, on the flip side of that, because I'm glad you brought that up, we just went over how the Fed can't raise rates because I believe it's going to cause fear again, like 2016. But let's go the opposite. What if the Fed turns a different direction and says, you know what, we're not going to raise rates right now? I believe that investors are going to go, oh crap, does that mean they're going to print more money, which could devalue the dollar and bring precious metals up? What do you think about that?
As we're doing this interview right now, the Fed just released the December minutes. They're very hawkish. The Fed knows that they've stimulated way more than was needed, and that's fine because they handled a healthcare issue with economic solutions. So it's very hard to get that right. But 25% of all dollars in creation in 1 year, that is unsustainable. They understand that. They know that they've over stimulated the economy, and they will raise rates this year, either 2 or 3 times, and they will start either in March or June. This is 100% what they're signaling. They cannot reverse their signal. What I think is really important is to understand that gold is priced perfectly for this. The market was not priced for this. And that's why you're seeing the Nasdaq crashing and gold holding firm. And it's only going to get better.
Now, I'm glad you brought that up because I just jumped onto CNBC, and right now, quite frankly, the markets are puking. It is a bloodbath. And the reason why it's a bloodbath, and it's funny because you just said gold is holding, and it is, but we have all the major indices down today, actually all of them that I can see. Gold is very, very slightly down, $4. But we have silver down, copper down, palladium. Today is a liquidation day. It's one of those days that most people don't realize when everything is going down, and I don't have the USD index. I don't know what's going on. It's probably up. But when everything is going down, it's that fear trade, right? People are afraid. Traders are going, where do we go? Isn't that correct?
Absolutely. The fear of rate hikes is it's a big fear. The reason is that it introduces an uncertainty about how mortgage rates are going to be. And remember, 33% of the workforce right now is millennials. It's going to be 75% of the workforce by 2030. The people buying homes are millennials. If you're raising rates on them, you just don't know how to judge their behavior. It can cause a recession from real estate. So that's the big problem.
Yeah, and as you're saying that right now, I'm looking at the 10-year bond. It's up a little bit, pretty nicely actually on the day, which does have upward pressure on the mortgage market. So you're right on. So this is the thing. I wanted to have you on for 2 reasons. I had so many people ask about the company that I covered the other day. And even though I don't own the company currently, Gold Mining Inc., you know a lot about the company. You were super passionate about it. And when we talked last time about this, when I said I was going to be doing this video, you had tons of info for me. And so I wanted to have you on because so many people were asking questions about it. So if you don't mind, could we talk about that a little bit?
Yeah, absolutely.
So you talked to me about the importance of knowing when to buy assets and when to sell. And Gold Mining Inc., Amir had purchased properties when the gold bubble had popped. And when I say gold bubble, I believe we're in a long-term uptrend, a bull market cycle for commodities. We're talking multi-decade to me. But in 2010 to 2012, we saw it run up and then pop. And a lot of these companies didn't have the money to sustain operations. And so they started to have to either sell, raise more capital, and eventually completely, some companies actually went under. So you were talking about how Amir actually purchased these properties. I actually found it pretty fascinating. Can you talk about that?
Absolutely. My company and Amir's companies, Uranium Royalty Corp, Uranium Energy Corp, Gold Mining Inc., which we're talking about today, we have a relationship going back over a decade where my company really helps the retail investor understand these companies that Amir founded and runs. When he founded Gold Mining Inc., he went and looked at projects collectively valued for $850 million and was able to purchase them all for $81 million. So by raising capital and just waiting, he was able to buy at 90% discount to where they traded just a year before. That's step one, acquiring at steep discounts.
Now, I think that's awesome because that shows the power of leverage with stocks on the upside and the downside. And I think it's important to have dry powder ready. It sounds like he already did. And it sounds funny because you were talking about the uranium company that you're a part of or own. And I'm seeing a massive day for uranium, right? And I sort of want to put these two together. When did you or Amir or both of you get involved in uranium? Because I think that's going to tell a story about the gold.
So if you look at his companies, the ones that he runs, UEC and Uroy, our newsletter, Wealth Research Group, it profiled both companies in July. Both of them doubled within a month and then even went up another 100%. So we got into the uranium trade in the summer because of the pivot to ESG and green energies. What's happened in the last 2 days, Ninja, is that the EU is starting to treat uranium as a sustainable energy source, which clears out all the environmental hurdles. And you've got the whole scenario and the storm going on in Kazakhstan, which is the #1 uranium producer, obviously affects supplies. And these companies are, geographically in such great locations outside of that conflict area.
Yeah, and this isn't a commercial for the uranium companies. I want you guys to, so we're going to put some pictures together. Sorry. And seriously, Lior, when we got on the call, there's no notes. We're just going to go and talk about the economy and planning ahead, right? Strategically investing before something happens. Now, again, guys, I don't own any of these companies. I don't own stock in any of them, okay? Matter of fact, my position's a little light right now because I have other things going on with my businesses. But I'm trying to get ready to position myself for the best move. Now, he talked about uranium. It's up today because of geopolitical threats, but even more than that, there's other issues with uranium. People are starting to really figure out it's probably the best way to go with energy. Sorry. When about what year did you guys both start investing in these properties to put these uranium companies together?
Man, uranium had an epic bull market if you go back over a decade ago. That's when Amir realized that in the United States, there is no production. They literally, the United States government has abandoned all independent domestic production. And he understood that, and he built the in situ production, which is the lowest cost production for uranium in the world in Texas. So that's how UEC was formed. Then he spun off some of the assets, and he created a company called Uranium Royalty Corp, which is the only company in the world that is a uranium royalty play. There is no other company like that in the world. So Amir's relentless that way. And he did the same thing with gold. Gold Mining Inc. is a company that spun off royalties into another company called Gold Royalty Corp. And if you look, Ninja, at the market cap of Gold Mining Inc. today, at $250 million Canadian, more than half of the market cap is the position that they hold in GROY. If you take the other half, that's $120 million Canadian, or about $90 million USD. You're talking about a company that holds 32 million ounces of gold in the ground in their projects. It comes out to $3 an ounce of gold.
So I hope I painted a picture, or I'm painting a picture for you guys listening, because talking about uranium, it bottomed around 2017, 2018, but being able to be a part of that and building those companies and those assets early before that next run up in price was exciting. Gold, ironically, at 1800, we're not talking about it being at the top. We're all talking about it in the industry as it's just about to take off, yet it's near its all-time high from way back in 2010, 2011, right around then, right? 2012, I'm totally blanking out. My point being is, like Lior is talking about, these assets are still super low, and we're still literally bumping. We're only about $170 from its all-time high. So that's what I think is really interesting, because as inflation keeps rearing its ugly head, we go from transitory inflation to transitory hyperinflation. The most leverage I can find as an investor, and again, this is not investment advice, I'm not investment professional, but the biggest leverage is, it's one thing to own the metals. And I always say, if you don't hold it, you don't own it. But if you have a little speculative play, it's these stocks, these mining companies or royalty company shares that show the most acceleration.
Can I just say one more thing? So Gold Mining Inc. in particular, and I know we discussed it. And by the way, I put a really comprehensive report on Gold Mining Inc. If you go to wealthresearchgroup.com/ninja, you can download that. All your viewers can download it, and it goes through everything, the corporate presentation. And so with Gold Mining Inc., this is a company that BlackRock is a shareholder of. This is a company that's on the GDXJ. This is a company that Rick Rule, Marin Katusa, and Doug Casey are shareholders of. It's a company that's unique, and the crown jewel of the company is the fact that everything that Amir has done over the past 10 years to unlock value has come to this point where now literally it's priced for $3 an ounce of gold, where the industry is priced at 40.
Yeah.
So if you're a CEO right now raising capital and you want to buy ounces in the ground, just like Gold Mining Inc. has, you're paying $40 an ounce.
Yep.
If you take the 30 million ounces that Gold Mining Inc. has and you price them at 40 an ounce, it's $1 billion company and not a $200 million company. And that's where the upside comes from. That's why I'm excited about it. You said you're not a shareholder. I am definitely a shareholder of the company. We work with the company on an ongoing relationship. And yeah, we're huge believers.
Yeah, and I'm glad you disclosed that, because with me, I have a certain amount of mining companies, and I'm into all kinds of things: oil, cryptocurrencies, holding physical, all that stuff. I do own a few mining companies. I'm getting to know this more and more, and I've been taking my subscribers along with me in my journey to learn about this, because I know what these mining shares did in the early 80s when everything blew up, and it almost seems like it's overnight. And like with uranium, I don't think uranium's done, but I also don't think gold has even got its start yet. So with that being said, I know we wanted to do this short because you got a lot of things going on today, but is there anything you want to close with? Because I am going to link that that specialized link so that they can download the reports for free.
Okay, so I'm gonna surprise you.
Yeah.
I'm gonna surprise you, Ninja. If you go on Gold Mining Inc.'s official presentation, you go from top to bottom, you will see no mention of a uranium project. Yeah. They literally have taken the uranium project off of their presentation. But if you go and look at all of their press releases, they own a uranium project in the Athabasca Basin, which is the Saudi Arabia of uranium. And literally at this point, if you look at all of the analyst reports, none of them ascribe a value for it. So not only right now, if you become a shareholder of Gold Mining Inc., anyone that becomes a shareholder of Gold Mining Inc., not only is he buying gold at $3 an ounce, he's basically getting the uranium project for free. Yeah, and it's an unbelievable thing that literally even the analysts are not picking up on. So I wanted to throw that out there because you were talking about uranium, and who knows better than Amir how to unlock value from a uranium play, because he's done that with companies that are in the uranium space and are worth $1 billion or more. So
it sounds funny. You didn't tell me about that. And true story, most people don't know what Athabasca, the region, is. It's in Canada. Very mineral rich. It's incredible. And actually, before I'd ever heard that word, I was told by somebody in my life that there's going to be a day where they see me actually working in that region, moving materials. And it's funny because that was told to me like 15 years ago. I'd never heard that word. Yeah. And I started researching it about 3 years ago. And that isn't, and guys, this isn't financial advice, trading advice, but what I researched about that region, it is not only huge historically for mining minerals, metals, but it just the potential with today's technology to be absolutely huge. Well, cool. Leo, I thank you so much for coming on. I really appreciate it. In closing, guys, we're going to be linking that stuff below, the link to download this report if you guys want to check it out. And again, guys, thanks for watching. Everybody, you're awesome. Thanks again, Leo.
Thank you, Ninja.
Right on. Well, with that being said, guys, the Economic Ninja is out.